Welcome to the eMoney Masterclass by Beratung Advisors, eMoney 102 Base Facts. So in our eMoney 101, we gave you a detailed overview of how the system works. I always like to tell you, if I can teach you the why behind eMoney, show you how the system works, then you can take this tool and not use it the way I use it. Don't be a second-rate version of me, be a first-rate version of yourself. And that's what we're going to try to show you today in Base Facts. I'm going to heavily lean sometimes and tell you how I use these Base Facts, but I really want you to learn the why behind this, because ultimately, this is going to allow you to make even better plans than I do. And so you're going to get used to the term facts and base facts, which is going to result in the base plan in the future. But I want to say this. When we get into the facts here, the way eMoney has laid out the facts has not substantially changed since I started using software in 2006, and I think that's for good reason. See, I believe the way that they laid out facts is one of the key differentiators of eMoney. It's one of the reasons why I believe it's the best financial planning software available out there. There's a couple key areas, facts, and also inside of facts, the next steps, the client vault, the client portal, and inside the client portal, the onboarding tool, decision center, and the lead capture. Those key areas, I believe, are the differentiator for eMoney. So that's why we're going to spend this time and do a whole section, a whole 102 on facts. Also, I just want to reiterate, again, we are not getting into techniques. We're not building out plans yet because we have to understand this part. So let's dive right into it. So we're going to get into our client. This is our sample client, Barney and Robin Stinson. And before I start to talk to you about facts, while I'm in the client, I want to talk to you about a key point that I'm going to continue to highlight in this masterclass series. You're going to notice that I have this in present mode. And you're going to notice that right when I came in here was in present mode. As a CFP professional, you have an obligation to protect the privacy of your clients. And this is a really great tool for you. I encourage every single user, client-facing or not, to be in present mode as much as possible. A general rule of thumb, you should never be out of present mode unless you are intentionally changing something in a client plan that requires that. And the majority of the time, when you're doing stuff, when you're adding information to a client plan or you're building out techniques for a client, it does not require you to be out of present mode. You don't want to be in a situation where you're meeting with a client and you go to pull up your software because you didn't have it pulled up right away, and you go into that home screen with all your client information and they've just seen your other client's data. Or the situation where you weren't in present mode, you were already in the client, and your computer malfunctioned, you got the blue screen of death, or eMoney malfunctioned, so you had to log back in, and you come back in and you see all your client data. It's not a good look. It erodes the trust factor that your clients have for you. This is a powerful, powerful tool that eMoney has that I'm going to encourage you. Even if you're not client-facing, why is it important to use it this way? And you're going to hear me talk a lot about this with base facts and advanced facts. I don't care if you're client-facing or not. There's two main reasons why. One, you're going to create that habit that if you ever get in a chance where you're client-facing, you don't have to learn it. It's habitual. You do it without even thinking. It's muscle memory. But two, if you work on any type of team, and if you are not client-facing, that means you're in a team, it becomes common vernacular and language. It becomes something that you call each other out on. It's sharing the same type of screen. And you're going to hear me talk about the base facts. So again, notice how we're in present mode, and you're going to notice the vast majority of eMoney Masterclass is in present mode. Now, when we did eMoney 101, there was things I could not be in present mode for. But in here, I can be. So when we look at the top here, we have overview, we have facts, we have plans, we have report, and we have vault. We're going to go into facts. And so one of the things is when you come in here, if your facts doesn't look like this, if it looks like advanced up here, so you can see this advanced button, when you click on it, or your screen looks like this means you've defaulted it to go to advanced facts. I'm going to encourage you, and I have heard a lot of arguments against this, and every time I've sat down with a planner and given my point of view, they've been convinced to get off advanced facts, get off that drug. Here's the reason why. when we go back to our base facts here, when you look at this screen, this is designed to present to clients. So we have up here, we have our family and friends, we have our financial priorities, we have our goals. The order this is listed in, the naming conventions up here, and everything was designed to present this to clients, to give clients an overview of their financial plan, their financial positioning, where they're at in life. I'm not saying you have to use it in front of clients, but I believe without using it in front of clients, that's a Ferrari that you're putting 87 in, right? You are not using this to full your capabilities. With our firm, our first meeting, we call it the listen meeting, and that's where we spend time. We tell clients to never bring data to this meeting because then all they want to talk about is data. I don't need you to talk about your data. I want to know who you are. I want to know your why. I want to get to the root of what you are. I don't want to talk about finances. I want to talk about what's important to you. Then we collect our data. And our second meeting, our clarify meeting, that's what I'm presenting to the client that I understand them, right? And we do this all inside of Base Facts. This is literally the screen that's up in front of our clients, and we're going to run through this. But also, if you're working on a team and you're looking at a plan, you should want to come in here and look at Base Facts. So this is where I make the argument. If you're not client-facing and you want to use data input in advanced facts, what ends up happening is you're using a different screen than the people that are client-facing. And now one person's speaking British English and the other person's speaking American English, and it just leads to miscommunication, and it leads to less productivity. So when you're constant in a screen, and also if you ever switch to client-facing, or if you're client-facing, you switch back to non-client-facing, then you have the same commonality, the same muscle memories. When you're doing training across the board, it's common shared vernacular. Also, when you're constantly hearing Base Facts, when you get in front of a client, you already have the muscle memory. I can literally, without clicking on any one of these, I could close my eyes and tell you what every single one of these screens looks like because I've used it so much. Just like I encourage you all the time, and I encourage our team, to use eMoney. Force yourself to find a way that every question your client has. If you have to use other software, so we use Holistiplan as a tax planning software, and we will literally go into Holistiplan and then we'll present it as much as we can in eMoney. So we go in there to do more detailed work, right? Because eMoney is great at projecting taxes forward, not at looking at really nitty gritty right now, right? Because it's looking at so many other variables. I want to isolate the variables, I can Holistiplan, but I want to go back and use that Holistiplan to present it inside of eMoney. The more and more I can use this as my tool, then I master it, and then it's not a tool, right? If a contractor has to tell me what type of wood that they're using to do 2x4s, that's not good. I should just see a wall. Like people should understand that this is eMoney. They should just understand it's the way you communicate. It's your language, right? So that's what we love about Base Facts. So let's go through this. So the first one is your family and friends. All right, so if you're going through this and you're starting to do data input, what you would do is you would just come up here and you click on this name. Now then you click on this name, it gives you this, okay? This is really, really, really important. This is where advanced facts versus base facts, people get all out of whack. I'm not saying to only use this as your data input. What you're gonna do is when this screen clicks up here, and by the way, I don't encourage you to use these pop-up screens. I don't know if it's the version of Chrome I use. I keep everything updated. Maybe I should be using Firefox or something else or Edge. But the reality is about 1 out of every 20 times this glitches on the screen, and while I'm in front of a client or while I'm doing something, it just doesn't work. So I always, when I pop up the screen, no matter which screen it is, these little pop-up screens in Base Facts, I'm gonna click Advanced here. Well, Greg, it just took you to Advanced. You could have gone there to Advanced. That's what the people that are non-client facing will say. I understand that. But the act of knowing where all this stuff is in Base Facts helps you when you're coaching somebody that's client facing. That helps you when you're with a client. You still got the same thing with one more click, right? So this is all the information you can do in here. By the way, if you have a CRM, it might connect some of this information or not connect some of this information, right? Our team, by the way, we don't put as much of this personal information in eMoney. We rely on our CRM for that information. We have found with our CRM, we are WealthBox users, and we were previously recovering Redtail users, that we just find it's not really worth it for us. We really just put our basic information in here. So if you want to go back to facts here. So personal information. We literally sit here and we see every client. And by the way we get the majority of this information is through the onboarding process. We are big believers and users of the onboarding process. We don't use a third party like Precise FP or other fintech options that go out and collect data for you and bring it into eMoney. Why use another tool? Why have to build another tool? The onboarding tool that eMoney uses is not perfect. But I don't want to customize something and spend time customizing it and fixing it and updating it if the tool works very well. I also don't want to do data collection through third-party software because then the client's not used to using the vault. It's the same thing as the base facts. I want that client to use one tool. If you give a client multiple logins, multiple ways of doing it, they just get confused. So if I send them a separate email and saying load your information this way, or data collection or fact finder some other way, they're not going to get used to using the vault. And then in the future, when I want them to load their tax return in their vault every year, they don't know how to use the vault, right? So we by the way, now you have to learn another third-party tool. So we try to force ourselves to use one tool, limit our fintech stack. We don't want to limit our capabilities, but as much as we can, we want to rethink through that on our team. That's what we try to do. So when I go through this with a client, I'm going to say, Mr. and Mrs. Client, did we get this information correct? Like, is your date of birth correct? See how this is a presentation? Hey, is this occupation correct? Is this retirement age? We talked about this in our first meeting. Is this correct? And this is where I typically go into, these are your base facts. This is your base plan. Mr. and Mrs. Client, we will change this. That's where the power of this tool is. What we're going to say is, this is what you're doing if you don't make any changes. It's like scientific testing, right? We are doing one thing, and then we'll test different variables and see how they impact it. That's the beauty of Decision Center. This is where Decision Center, and you compare it to their big competitor that has one side-by-side situation in its goals-based planning, it doesn't work like Decision Center does. It doesn't think like a human being does. It doesn't help us make decisions, informed decisions the same way. But you have to start to do this, and as you're reiterating to the client, these are base facts. So when you change other facts, getting in terms of that, these are base facts, these are base facts, these are your base plan, and now we understand, well, what if we did retire 1 year earlier? What if this? What if this goes into Decision Center? So you're reiterating, you're also showing the client you understand their information. The life expectancy in our team, this is where we actually take the time and we talk about, we call it the 4 basic assumptions of financial planning. And so for us, the 4 basic assumptions of financial planning are longevity, inflation, taxes, and market returns. We believe that those are the 4 ones as a CFP professional that we have to take the ultimate accountability and responsibility for making the projections. And we believe all the other data inputs come from our clients. That's the customization, right? When do you want to retire? What are your goals? What makes you, all those different things are going to be that. So we have to make that. Now, granted, we customize that. So if you tell me that you have really poor family history, we might use a lower life expectancy, right? But we have these base life expectancies we use, base inflation we use, base tax assumptions we use, and base market returns based upon a client's portfolio, aka capital market assumptions, and using Monte Carlo. So this gives me an opportunity. See how this is like what you want to talk about with the client. It's in the right order. It's genius. Whoever the person at eMoney that first laid this out, at least 15, 20 years ago, somewhere in that time range, hats off and kudos to you if you're still working there. So we look at the next part. It goes to their children. And then this could be grandchildren, right? So if you look at this, when we go up here and we go to add, you're going to notice we can put children, we can put a grandchild, great-grandchild, we can put other. So those things are in there. Professional contacts. So we collect our clients' property and casualty. We collect our clients' tax return. We're CFP professionals. We have to look at everything. We collect their insurance. So we put their insurance agents in here. We put their tax professional in here. We're going to put all that information in here in professional contacts. Again, I'm showing the client that I understand, but that I'm authority in their financial life. But the other thing that I'm going to do in here is in their client portal, they're going to be able to pull up that contact information. I want them to use our client portal for everything in their life. So I want, if there's one person that handles the finances, I want the other person to be able to go to the client portal and be able to see that. Know who their accountant is, know who their lawyer is, know who the information they have. And we got that stuff in their statements. It takes a few extra seconds. And again, the more and more you can say to the client, everything about your life is simplified in one place. This is the beauty. A lot of times what I will do in here, when I'm in here, is I will go, especially because this is for us, when we're going through this in straight detail, This is always the second meeting for us for a client of a new household, and I'm trying to reaffirm and teach them things. I'm actually going to click, and I'm just going to show you this really quickly to not get too derailed, but we're going to go up to the globe up there, and I'm going to click Manage, and we can click here and we go to Preview Client Website. Now this is a sample client, so they are still in onboarding, so we're going to hit down here and go to My Home Page, and we're going to skip onboarding. But if this was a real client, and they would have already gone through the onboarding process, you're going to go right into here. I'm going to say, Mr. and Mrs. Client, just so you know, you can get this information, and I'm going to click up on the Organizer tab. And I'm going to reiterate, like constantly, like, just so you know, you can see this information in case you forget your spouse's date of birth, or in case you forget your child's date of birth. We're going to click on Sparkles right here. And I'm going to show them this. By the way, if you haven't done this, I've done this for a certain portion of clients, but you can go on Facebook and you can grab their pictures, you can grab their grandchildren's pictures and have all their grandchildren's pictures and customize it. You can go to Google Maps and grab a street view of their house, put a picture of their house inside of there. So we're gonna get out of this, and just so you know, when you get out of this, we're gonna click the sign out up here. That's how you get out of that where you're mimicking. But the more and more I can reinforce, the more and more I can make it easier. When you go and purchase a new vehicle, they say, would you like me to show you all the features? Right, when you go purchase a new iPhone in an Apple store, the people at the Apple store, the nerds, or I forget what they call them, geniuses. The geniuses are going to sit down and show you the features of your iPhone, walk you through it. The more and more you can teach and enforce that to your clients. So we're going to click up here and go back to our base facts up here, but you could also click facts up here, multiple ways to get there. So this family and friends, I think, is important. And I think it's important to start out with that because it personalizes it. It customizes it. I know your children's name. There's nothing more powerful than to say a child's name in front of a parent. One of the things, if you've ever done grief counseling, and I highly encourage you if you're a CFP professional, if you've never done grief counseling, you really should. But one of the statements I've heard in grief counseling is, you're never really dead till a person alive stops whispering your name. Names are a powerful thing. If you have a client who's lost a spouse, make sure you say the spouse's name all the time when you refer to them. Don't avoid it. It's the same up here. This is a powerful tool because they can see the names of their professionals, they can see the names of their children, and this will relate to everything. I'd be remiss if I didn't say at this point in time, it defaults to all my children's beneficiaries. Take the extra time for every account always. You'll hear us again in eMoney Masterclass. Change it so when a beneficiary report, it doesn't say to my children equally, or what you want to say is the children's name. That is a powerful thing, but you can't get that right till here. Hey, maybe you misspelled it. It's great to have it out on the table and say, hey, we misspelled it here. This is important to make sure you have the data correctly. Now, how often do I go through this with clients? We typically go through this with our clients at least once every other year. Some clients every year, especially if something's changed drastically in our life. It doesn't take long to go through this. The first meeting I go through this with a client takes about 45 minutes because I'm having conversations, and when I get to the next tab is actually usually about 25 to 30 minutes of that meeting. But when I have a client who's been a client for a while, I can go through these base facts typically in about 10 minutes, and you'd be surprised how often something's changed. Oh, no. You always start out review meeting. Tell me what's changed the last time we got together. Oh, nothing. Then we get through base. Oh, yeah, actually, I don't have that 401k anymore. I left that employer. You ever told me that? I asked, you know. So, all right, so we get down. So again, I love the orders. The next one is financial priorities. So you can call these whatever you want. Life statements, positioning statements, priorities. Some people call them goals. We don't call them goals because we want to be using eMoney language. We used to call them goals. So a big belief on our team, and one of the things that we're really big on is every single one of our clients has 3, not 2, not 4, not 5, not 6, but 3. 3 financial priorities that are written in their own words. So in our team, when we bring on a new household, our number one goal in the first meeting is to figure out what these 3 are. We typically try to have 2 people in our first meeting. We literally have a debate afterwards. What are their top 3 financial priorities? And we truly believe that if we get these correct, we will land that client. So when we go through these, when you first come in here, if somebody went onboarding, they're going to select from this list, and it's a very standardized list. And so you might have 10 or 12 in here, and I leave those 10 or 12 in there, and I add my 3. And I think it's important because that's why I love onboarding. I love it because the client will tell the computer something different than they told me. And you see if there's things out of alignment. It's like when you do a client survey, wait, the client I thought was really happy, they weren't. I thought that client was unhappy, they were really happy. You know, it's amazing what somebody will tell a computer in a different room. So you'll come in, there'll be all these different ones. Then we add R3 in here. One of the things that eMoney is going to improve in the future that I've talked about is I hate that these are all dollar signs. I wish that when the custom ones could say something different, but they're honestly all dollar signs. But the way we utilize this, if we want to hit done up here, is I'm going to talk to the client, and this usually takes about 30 minutes, low side maybe 15, and I'm going to say like, hey, your first priority was retire as soon as possible. Your next priority was to have financial confidence through a plan. Your next one was to a retreat to make family memories, right? So this client, it's very specific to this client, right? And I'm going to have this conversation. First, I'm going to pause after the first one and say, does that sound correct? Does that sound like the number one priority? Tell me, did I hear you correctly? And then we're going to deal with each one. And then I'm going to say, are these in the right order? Do we need to reorder? And then when we get done, especially married couples, we call it our North Star. We say, this is our North Star. This does not change. This is my march towards as a CFP professional. This is all that matters. These are the values. These are your core values for your financial plan. The only way these change is if something fundamentally changes on your outlook of life. And that can happen, especially when somebody that has a child, these start to align, right? Somebody wasn't married, gets married, these start to change. But they should have to have, it's not because the markets went up or down. It's not because they got a new job. These are the things. And then we could say like this couple, nowhere in here does it say pay for college education. Actually, a retreat is higher. So when they start debating whether they should pay for college education, we can't do it until we've achieved 1 first, 2, and then 3. So that's how we use financial priorities. Again, you can see why I believe if you use this tool, that this base facts is great. Use this, don't be a second-rate version of me, be a first-rate version of yourself. I'm trying to show you how we do it and why we do it, because then if you understand it, you can incorporate it. And by the way, if you have a better way to use financial priorities, if you have a better way to use all this stuff, do me a favor. I'll provide this tool for you for free. Give me critical feedback. I thrive on critical feedback, positive or negative. I actually prefer negative. I learn more from my mistakes than I do from my successes. So if you think that anything I do in this video is out of whack, if you think any of this video is different and I'm just crazy, I would love to hear from you. Best way to get a hold of me, reach out to me on LinkedIn. I can filter my messages on LinkedIn. I can't filter my email, but you can email me, you can call our office. I would love to hear from you. So we come down here next to goals. And I think this is very vital because people get goals confused. So especially a client that comes in here and they've done a lot of goals inside of the onboarding, it's all over the place. You know, they put the wrong information there, but most importantly, we try to reduce and eliminate. Because this is the base facts. This is the base plan. Anything that we might do, you know, we think we might want a lake house in the future. That's not a goal. This is not wishes. A goal is something you are focused on. I'm a big fan of Gino Wickman, the book Traction. I highly encourage anyone that's running a business or a leadership position, you should have read that book at least a dozen times. We're big EOS disciples here at Beratung Advisors. And one of the things that Gino Wickman talks about is the power of a goal is like taking a magnifying glass, okay? If you sit outside, you don't get really, now if you sit outside really long, you could get skin cancer, you could get sunburn, but it's not a fear of the sun. But if I take a magnifying glass, I can take that power of the sun and I can fry an ant on the sidewalk. That's what goals are like. Goals are a singular focus. I tell a client, it's not a goal, and I tell anyone this, it's not a goal unless if I walk up to you and say, what are your financial goals? And without thinking about it, without looking in the upper left-hand corner of the sky, you can tell me that. You can never have more realistically than 3 goals. How do you focus on more than 3 things? You can't. You can't. So these goals, what our goal is to eliminate and reduce these. Eliminate and reduce these. Now you might say, Greg, this particular client has college in here, and you just told me their financial priorities. No. That's our lens of how we make decisions. That's how we prioritize. Similar to core values of a company, similar to personal core values, these are essentially your financial core values. Right? These are your life positioning statements. If you're really a fan of Carl Richards' one-page financial planning and some of the work that he does with Behavior Gap, you're probably familiar with some of this information I'm talking about. But these goals are actual quantifiable, right? These are SMART goals. These typically don't have numbers assigned to them. Some it could be, I want to retire with confidence by 62, but a lot of times it's retire early with confidence. This is where we quantify them and make them SMART goals, right? Specific, measurable, attainable. I'm sure you're familiar with SMART goals. And so one of the things, by the way, eMoney has this. You cannot get rid of this. eMoney, C-Money was from Guardian. And so there's a lot of life insurance holdover and influence on here. I've never, actually shouldn't say, I did use this one client. She wanted to leave $1 million to her sister. It was a really kind of random thing. It was a specific $1 million. But what this is, if you put something in here, if you put leave to heirs, what it's going to do is the trials of Monte Carlo, if you said leave $1 million to heirs, and the result of Monte Carlo comes to $999,000, that's going to be a failure. So again, unless you want to leave an oddly specific, even sometimes like, hey, I would like to leave $500,000 to charity in your base plan. No, let's test if we leave that $500,000 to charity. Let's test for that. So again, what I use this as a tool to reinforce what the goals are, be really clear, like we are going to retire at 65 in our base plan. We are going to pay for college education in our base plan. We will test for different things. And so a lot of times what I do is I'm removing stuff, and I've already built it in my techniques, but I'm going in there. But I'm going to actually remove stuff from here if a client put it in here. But also I'm going to take a step back because maybe I got it wrong. Does this sound right? Are these the goals? And a lot of times I'm like, well, you missed this goal. I'm like, no, we're going to test for that, right? Buying a bigger house is not our base plan. It's not going to be considered successful or unsuccessful if we do that. That's a wish. That's a desire. That's something that we're going to help you to decide how to get there. We want to get in a base plan. So next thing we're going to do, and again, I love the order of these. We talk about who you are. I understand who you are. We talk about your core values, right? The building blocks. Then we talk about your goals. Very similar to business planning. Very similar to family planning. Very similar to any type of planning in life, right? Who are you? What do you value? What do you hold close? What do you want to achieve over the next few years, right? And then now we understand that, let's see if the goal is attainable, right? And so that's what we're going to do inside of here. We're going to go to net worth. And I love this tab because this, so often, we use balance sheets, right? And as CFP professionals, we got to show financial statements, right? We're taught to do that. But most people don't understand what a balance sheet or an income statement is. Most people coming to us because they don't understand that crap. They don't want to see that. I'm a business owner. I like to see things in P&Ls. I love to see things in balance sheets. But most people don't. And I love the way this is laid out so simply. I love the fact that we have control of the naming here, and we can personalize this and customize it and names that clients understand. A lot of times we try to capture the naming. We don't have specific naming convention we use for our firm. I know a lot of other firms do that, and I'm not saying anything against it. But this is where you personalize and customize. I have a whole series I do on scaling planning. I always talk about there's a difference between personalization and customization. And I think we get them so wrong. And why people can't scale financial planning is they try to customize everything. You kind of heard that in my whole speech about using the onboarding tool. Customization is not the same as personalization. Customization is very expensive, very timely, and the ROI is not there. Personalization is. So customize is, I built a suit from scratch. Personalization is, I took a suit off the shelf and I put your name in it, right? So we don't get custom swag stuff, we personalize swag stuff by putting our logo on it. That's what you're doing when you're using clients' names in here. When you're doing stuff, you're personalizing it. So when you start to put in, this is a sample client side, like checking, but I would put like Barney and Robin's checking account. Like the more and more you can speak clients' names in here. But you also want to keep them short enough so when they show up on balance sheets and other reports and you're doing things and cash flow statements, and when you're looking at the ledger yourself, don't use the ledger in front of clients, you can see what they are. But I love this, and I literally pull this up for clients again, and I'll say, so, this is where we have things. They can see who's the owner on it, what's the amount, they can see the name. Just standing on the screen and doing the 5-second pause. I love awkward 5-second pauses. My team knows that. I always say, you don't realize how short. You guys train yourself 1 Mississippi, 2 Mississippi, stare at a client till they talk. It's a stare down, and I love doing it. But just sitting here and just let them take this in. And I will tell you, it's amazing to me how many times when I'm going through this with a brand new household that they're like, we forgot to tell you something. or this is the first time I actually understood my financial position. And the conversations you can have just on the screen are amazing. But I also love a screen for existing clients because, again, I told you can go through this in a couple minutes. Hey, oh, you know what? My 401k is missing up here. We had an intern at our firm many years ago, and he was in a joint appointment with me, and we're sitting there, and this client was one of my longest existing clients. And we're going through this same page, and it's been a client forever. And I'm going through this like, hey, I've been on this tab, I don't know how many times I heard. She goes, you know, just realized my Roth IRA is not up there. I'm like, excuse me? She's like, my Roth IRA. She's like, I forgot, I had this Roth IRA up, it's like $20,000. And I was like, oh, you know, well, let's put it up there. I was like, hey, can you give me a statement? I want to make sure it's positioned right. And she's like, yeah, next thing you know, we got a statement, brought it in, but he was blown away. He's like, people just lose $20,000? Because he was still in college. That doesn't seem like all the money in the world to him. And he wasn't realizing how busy people can get. We work mainly with busy working professionals at our firm, and how convoluted people's financial lives go, and you know, people lose stuff to the state. I actually just found out about a year ago that I had an HSA. There was like $14,000 that was, the state of Pennsylvania reached out to me. It was unclaimed property. Because I hadn't logged into it, they put away. I had to go and claim the property, right? Life gets in the way. You're busy and you're doing things, and he couldn't wrap his head around it. That's why this tool is so great. Now you say, Greg, I use Asset Map, it does this, or I use this, it does that. That's great. I'm not saying not to use those other tools, but if you have it here, and this is not aesthetically pleasing enough. Who cares? It's about having it all in one place. Because what you're doing when you try to get other tools in here, or you try to go to reports and bring up the balance sheet, or you try to print out a balance sheet. I know another firm uses eMoney, and they have this really beautiful, like, what did they do? It's all branded. I'm like, the amount of work you do, it's the same conversation. Yeah, it looks prettier, but man, having it all in here, it's about having a structured conversation. I can scale this and repeat this conversation. By the way, if you keep using this as your tool and you keep doing it all the time, you become better at eMoney. It goes back to that. You start to speak fluent Spanish, and you go down to Mexico and close a client, referencing my eMoney 101 introduction class, right? So you gotta start using this all the time. Also, if you use this as your data input, when eMoney 103 and your data input, if you come in here and you click on these, just click on one of these for me. Perfect. So we click on this. I would just go in here to advanced. That's how I get there. That's how I get to advanced. Right? I'm not in advanced. So now when I'm doing data input, if you want to go back to base facts here for me, when I'm doing data input, I literally come into base facts. I come to net worth, and I hit add right here. I do not go into advanced facts. I do not go to advanced. Why? So let's click qualified retirement right here. Boom, we're in qualified retirement. Let's go ahead and advanced. I just go right in advanced. I don't type anything in there. Boom, I'm there. Now I understand how to use base facts. I'm in front of a client. When a client asks me a simple question, if we want to go back to base facts, if a client calls me up and a client wants to talk about their accounts, I do not go to my custodian. I go into eMoney, right? And I can literally, by the way, I can go into reports, I can go into investments, I can go to gain loss reports. But if a client's talking about their accounts, I want to see it in here. I can literally click on, say let's click on their 401k. I go to advanced, and then I'm literally going to come up here to holdings, and I can literally see all their holdings right there. Right? So, because again, it's probably better to go to reports, go to investments to see the holdings that way, but I'm trying to train myself. I want this to be that I speak the language of eMoney. So we're going to go back up here to base facts. Net worth tab. Then we're going to come down to the income tab. And I think it's really important, and think about this, when you're studying CFP professional, you probably should show a balance sheet before you get into cash flows, right? And I love too that it's broken to income and then expenses. So often we try to show a cash flow statement, it's just too much going in. And I think expenses are the one nobody wants to talk about. So we're getting, again, the order this is put in, I believe, is genius. I would love to meet the person that came up with this order. Maybe it's a great team, I don't know. But man, this income here, let's talk about your income. Let's make sure this is correct, right? This is why we'll have conversations about your bonus, right? We put your bonus at $15,000, well great, I expect $30,000. This is gonna be smoothing over the future, right? And we're gonna run a scenario where you don't get that bonus. We'll run a scenario where your bonus is higher, right? But this is your base plan. What is the bonus that you expect, you're guaranteed to get? If it's a maybe, then let's run a maybe scenario. This is your base plan. This is your base fact, Mr. and Mrs. Client. Let's talk about Social Security here real quick. So we're going to click on Barney Social Security. Couple things we need to know, and I'm kind of alluding to a little bit of 103 here, but you always, did I say always? I mean always, benefit specified as full retirement age. I don't care when you take Social Security, I don't care what you do, when you're typing in. Now I said always, I'm trying to prove a point. There's actually times if clients already taken Social Security, you're actually going to not use that. But when you're putting in a projected future client, benefit begins is what's going to be on your base plan. So we default ours to full retirement age. It's a default. You can test for 70. You can test for 62. That's when you test. And I always talk to clients like, I love all these people out there tell you, they should all over you, right? You should do this, you should do this, I'm going to should all over you. What you should do is based upon what works for your plan. I don't care if you take Social Security and say, I'm not trying to get the most out of Social Security. I'm trying to maximize your plan. I'm trying to help you pursue your goals and live a fulfilling life, not to screw the government and Social Security. If we do it along the way, that's a plus for you. So I love this help me compare options right here. And we can pull up these options. Excuse me, right below here. Help me compare options. I love this chart, by the way. You can print this chart out as a PDF. This helps me to explain to them in a very quick way, without getting into detail of what PIA is, without getting into detail of how their benefits are structured. I'm reading their statement. I'm going to do all that stuff. I want to keep it simple as possible. And I'm going to say most clients, I'm going to explain to them why people say to take it at 70. I can explain the break points really quickly. And I'm going to say, once you get over stuff, none of this matters. None of this matters because I care which one gets you the highest percentage of success in the financial plan. And I'm going to tell my clients, I've recommended everything from 62 to 70. But it depends on what that client's trying to pursue, what that client cares about. And this allows me to start to have a conversation about what they think about Social Security. Oh, I'm going to die soon. I want to take it as soon as possible. I have a conspiracy theory that Social Security is going to be not there. So if a bird in the hand's worth two in the bush, I don't care if I make less. I don't care. I'd rather take the money out of there. There's all different types of things I've heard from clients. But it allows me to have that great conversation. I love this tool. Love this tool. I just wish this tool was inside Decision Center. And I wish this tool was available on the go-to presentation inside Decision Center. But let's X out of that. But it's great to have this too in here because I do believe if it was in Decision Center, I'd still want to hear because I think laying it out this way and having this conversation as you're going through this initial consult with this client. So we're going to X out of this one. We're going to dive right into expenses and taxes inside of here. Now I'm going to give you another 103 up ahead. But when you click on current expenses here real quick, you're going to see that we use expense worksheet. I'm going to show you how to do that later on, expense worksheet. Strongly encourage you to do that. But you might just have a blanket living expenses. Depends on how detailed you're going to get into cash flows, right? So we're going to go back to base facts. And one of the things I want you to notice is you'll see current and retirement. And after Barney passes, you might see semi-retirement is the other ones you can be in here. Or you also might see advanced age. What those are is another key triggers, and they're triggers eMoney uses, so they're dates you can set things to. One of the biggest faults of eMoney is you can't just pick a date for a client to retire. It has to be on December 31st, right? Or should be January 1st. It has to be when a client retires or one of these triggering ages like semi-retirement. And again, those are based upon ages. So there's triggered events, and then when you're using techniques, you'll see you can pick these triggering events. It's kind of foreshadowing some stuff in the future, kind of come back to that, and we'll connect those dots. But it's really important, I say to a client, to understand expenses. So we have these categories: living expenses, liability payments, education goals, other goals and expenses, insurance premiums, and then taxes. It's really, really important. Not everyone's going to have these, but this is where people get lost all the time. And this is another one I'll go back. I'm not going to do right now. I'll go back to their client portal and show them the organizer tab where they can see this, where they can change some of these. I talked about the little red X, and be careful on the little red X. I'll get that. I'll touch base that later on. But really, really important to understand. Also, just to put it in context for you, I've talked to you about the granddaddy of them all, the cash flow report. So we're going to go up to reports real quick up here, and we're going to click on cash flow report. I haven't favored it right here, but if you don't have a favorite, you can always go to all reports, right, and go down to cash flow. But in this cash flow report, we're going to go here, scroll down a little bit for me, if you don't mind, and we're going to drill into total expenses here. And what we can see is we scroll down a little bit. we can start to see these categories: living expenses, liability, other expenses, insurance premiums. Sometimes I'll pull this up in that part of that meeting just to explain to a client, this is what's going on inside of here. This is so vitally important. So the way that I explain this, if we're going to go back to base facts, I could explain it here, but I'm going to explain it back into base facts because that's what this eMoney is all about. So when I explained to them, I said, these are what I like to call, this is one of the times I use a fancy word, I don't care because it's just, I think it makes sense to most people. I call these your perpetuity expenses. These are the things that are going to last forever. So your car payments are not in here. Your mortgage payment's not in here, right? These are the things you're going to expect to happen for the rest of your life. You're going to have a cable bill whether you're retired or not, right? One of the things that I say that, I put a little caveat in there. I have medical expenses. Some of these change at retirement. So when we go on that worksheet, like travel goes up at retirement. You might see this is one of the ones that gets a little bit tricky is childcare. So a lot of people put childcare in here, and we do, because what we've realized is if I have a client that has children they're paying daycare for, they probably have childcare expenses the whole way till that person comes out of college. That smooths it out, right? So, and again, we can start talking granular cash flow. But in reality, if you can think about this, I teach our team, these are perpetuity expenses. Liabilities go off when they get paid. Education goals are for a short period of time for education. Other goals and expenses are a short period of time. So ones you often see in here is Medicare, or should be Medicare gap, we call it. So if a client retires at 62, between 62 and 65, we're going to have higher medical expenses. Our base medical expenses are going to be in that perpetuity one, right? Because Medicare isn't free, right? So there's expenses, there's things going to happen, but the pure insurance amount between that. And we might have another one that says Medicare gap for other spouse because it goes from that person 65 to the other person 65. That's a very common one we have inside of here. Another common one could be funding a lake house that they're going to purchase. Another common one could be in here is they have a very specific thing they want to do for like 2 or 3 years. So another one's if we put travel expenses in retirement, which will be most often do, but some people just want to travel a lot for 5 years. Then we might run another one, what if you travel a lot for 10 years and that continue longer. Another common one here is, and by the way, that's what this client has, is weddings, right? So we might have a wedding in here if they want to pay for a wedding. Insurance premiums. Again, insurance premiums are not in the perpetuity because that's going to change over time. So for example, if I sell my house, my homeowner's insurance is going to be different, right? Those things are really vitally important to have always broken out. It's also great that it's broken out. Again, I think the way this is laid out is in my opinion, really great. And in the order these are in, because it's a really great conversation to have and understand about insurance premiums, how they affect a plan. Okay, yes, we solved for your life insurance, where in the death scenario you were at red and we brought you to green, but that actually lowered your green of your normal plan. Why? Because you had to pay premium. And that premium to pay for that term insurance is money you could have put towards something else, right? So it's always that give and take. When you have to go and purchase that disability insurance, that's income that we have to come up with, right? We have to put towards another expense that has to take away from another expense. So I love the fact that this is separated differently, to have that great insurance conversation. And same with taxes. It allows me to have a quick conversation about our assumptions for taxes. It allows me to talk about how those are different. But I also love this, especially in the cash flow report, because yes, taxes is a great decision center. When you're scrolling through cash flow really quickly, it's great to be like, wait, why did my taxes go way up that year or go way down? It's because we're doing a Roth conversion or whatever it might be. So great way this is laid out. So we're going to go back up here, and we're in savings and contributions. One of the updates in the last couple of years I love about this is you can actually add the savings and contributions to something inside of here. You used to have to go into advanced facts to do that. But this is a really great way. Mr. and Mrs. Client, do you see this right here? Do you see how we can go into this and look at your 401k is this, the match is this, you're saving this? I'm a big proponent of, I love this. It's like, I put my money away. No. This is only systematic savings. Go back to eMoney 101. I talk about the buckets. This is the bucket that's capturing that water. So we come down here to asset allocation. By the way, there's times like, oh, wait, I'm saving my 401k. Wait, you told me you weren't doing that. I didn't see the statements. But, oh, I have another 401k. It's just a great tool. Asset allocation here, we always on our team have a recommended asset allocation here. I don't care if I'm managing their money or I'm not managing their money. This shows if I'm on target. Some people, this is where I'll have a Monte Carlo conversation. Phenomenal down here to explain the Monte Carlo if you don't understand it. This is where I'll talk to them about modern portfolio theory. Our firm's investment philosophy is nobody can predict the markets. We try to get market-like returns. with reduction of risk. We don't believe any personal lives ever be able to predict the markets, so that's a futile attempt. They hire us to be financial planners, not to be somebody who goes out and invests their money and tries to beat the market. So this is where I had that great conversation. There's a lot of other tools. What eMoney's coming out with the next 2 years will make this conversation amazing. I know a lot of other people go to like other tools, maybe use Riskalyze or it's a new name, I can't think off the top of my head, Nitrogen. Maybe you use some type of other tool in here. Maybe you get really analytical and you get Y charts or Morningstar, whatever it is. But again, in this quick conversation, I'm able to understand that, hey, your portfolio, we understand it, right? You could also get into the asset report here and show them side by side, a lot of different things. This is, again, this is the base facts, overview, and understanding. But this is a really great one because this tells me right away, are they in alignment with what we want? I always love this. I'm like, I think it's so basic that you can be like, hey, look, see this one? You got a big chunk of yellow missing. You got a big chunk of green that we don't have, right? It's like simplified. The more you can simplify it, and most people can understand it. So next one we get down is protection. Highly, highly encourage you if you're not putting in clients' medical insurance, their disability insurance, their property and casualty. We'll get to that input side of things. eMoney 103, we're going to talk all about input, right? Data input and doing all that stuff. But I think it's really, really important to understand here these different areas. You got to have these in here. It's a great way to have a conversation. It's a great way to quantify what they have in protection and let them see it really quickly, just like in assets, and see who's protected. Again, we're going to have a great conversation around this in Decision Center, but this is a great way to see this. And this is where, wait, you didn't have my HSA in here. Oh, I didn't? Okay, well, HSA is up in net worth, right? Because it's I don't know why that one comes up a lot. It's in protection, it just does. Or like, no, I actually have a different disability policy. Or wait, I don't have it. This is a really, again, and I love that it's last. We actually do, when we start presenting a plan, we actually present protection first, because we always want clients to understand, like, you got to protect, or should we understand protection first before you understand saving more. So that's the way we've done it. We also do that because a lot of clients think we're investment managers that do financial planning, not financial planners that do investment management. And so we feel like if we talk about something we're not getting paid on, and we talk about something like, hey, let's look at your will and will power returns, look at your property and casualty, and we add that massive value, it changes their mental mind that we're CFP professionals, not some type of salespeople that are trying to come in. So we have that conversation first, but when I'm viewing over this, I like to have that conversation last because it really helps the client to understand what's important. I believe this is a behavioral masterpiece. The order this is done is so well, done so well. So let's get on to observations and next steps. So we talk a lot about base facts. I want to tell you, this is my favorite part of base facts. I love it. And I love that this is last. I love the way this is laid out. Would I change the name observations and next steps? Probably. But actually over time, I used to be really fervently against it. I just become so much my vernacular, I don't even know I would ever even change that, right? So the way we use observations is anything we want to point out in observation, especially our team internally. We don't use any other communication channels. We're big Slack users and our CRM. But when we're building out a plan, so say somebody on our team is building out the plan and looking at statements, this is where they're going to make assumptions like missing beneficiaries. So in this meeting, we try to put those at the top. So I've got this, by the way, here's the things we call clarify. Here's the things I need to clarify with you. You know, it said this on your paycheck stub, it said you were saving this much for your 401k, but I looked at your 401k statement, it was showing me something different. Or, you know, your beneficiaries were on your 401k. Can we confirm that those beneficiaries are correct? But as we build out our plan, this is where all of our detailed recommendations are. This is really important for us. We actually have a separate document that has the most used recommendations and the basis for our recommendation. We do customize them for each person, but it's kind of like, I've actually been saying now ChatGPT. It was our version of ChatGPT before that type of thing. It was a bank of recommendations that we've used, and we like the wording, and it gives us the things that like to, when we're doing a new recommendation, look back, did we have that standard? It sets a quality standard for our team. So we do have that on a separate document that we put in it, where we populate these from. When you go to observations, this isn't one of the most annoying features of eMoney. It only allows you to pick from, so go to add observation. It only allows you to pick from these categories. I wish it could be the 6 areas of concentration a CFP professional has to look at, or at least put some other things, at least maybe match these columns to left. It's random, so we usually pretty much use current financials or retirement for just about everything. The only time this really matters is in some of the reports, it categorizes them in that report. So when you go to presentation, it shows observations, it categorizes that. So that's just a downside. There are these cool things where you can do like these quick ones and the dynamic text. The dynamic text will just use the client's name when you're typing. So let's just put client in here and hit add. And you could put like client, your 401k, and then when it shows up on the thing, it just has their name. We used to use a lot of the dynamic text. You can save that in your separate document the way it's written there and just copy and paste it into here. But what we realized is that's not the right way to use a client's name. So a lot of our clients maybe don't go by their formal name, and their formal name's up here. And we found it not to be as useful as we thought when we originally started using it. So that's your observations. Really, really important. This flows through to when you do presentations for a client, deliverables for a client. So we're going to X out of there, and we're going to come down, scroll down to next steps. Again, this is one of my favorite parts of eMoney. So when I was leaving my previous firm and going to start my own company, and I interviewed 27 different various firms. Some were RA only, some were hybrid independents, and some were even just W-2 shops that I was looking to change from my W-2 shop. And I remember meeting this older gentleman that was looking to bring somebody on to buy his practice. And I go and met with this guy, and he was showing me his process, and he had something that just blew me away that I'd never seen before. He had one of those 3-part debit memos, right? So it's like the top was white, the middle side was pink, if I remember, or yellow, and then the bottom was pink, or however they were. Probably date myself if you don't know what those are. There are still companies who use this, by the way, this technology. But he had one of those. It looked like the same ones you would get at Staples, where it was very generic at the top. It has company name. It looked like every single auto mechanic one I've ever seen before in my life. And it said a generic auto mechanic, it had like a generic money sign, and so whatever his name was, financial. And it literally had these blanks, and what it was in a meeting, he was telling the client to do things, the client, they were making observations and next steps. He literally write them out. He would sign it, his client would sign it. He would give the white part to the client. He would give the middle part to his admin, and he would keep that other part. And that's how they stayed organized. And I'm like, man, that's like more effective than CRM workflows, more effective than everything. What a great handout. Talk about the client. You made a promise to the client, you're shoring it, the client understands, talk about clarity. And I was like, man, I wish I had a system like that. And then I found out about eMoney Next Steps. And I'm like, this is a system that's so great. So one of the things I think is so powerful about this, if you're not using the client portal and you have eMoney, I know it's not the best client portal. I've heard from people. Who cares? Aesthetics and looks don't matter. It's, does it connect to your plan? Does it way to communicate? If you start to use several fintech stacks, people won't use it. It's like we're like apped out, right? If I say, hey, download an app, we're doing a weight loss competition in our firm, and somebody sent me an app. I'm like, no, I don't want an app. Just send in Slack what the updates are. I'm not using an app. I'm not going to download an app. I'm not going to go into the app. I don't want another app on my phone. I got about 700 apps, right? Your clients only want one place to communicate. And that's what I love about this. This next steps part right here, every action item for a client. You need to get a will, live, will, power of attorney. I'm going to not only do that, but type in front of a client because they've now made a verbal contract. The power of that you're going to do this, and we're going to set the date together. So it's not you telling them what to do. It's them set a date, and you hold them accountable. The majority of the reason why people hire us as financial planners is to partner with them to get a better life. They can do this stuff on their own. They can go read a self-help book. They can go take a class. They're hiring you as a professional, and at the end of the day, to hold them accountable. To educate, empower, to hold them accountable. This is that accountability piece. This is how we help clients pursue their goals, live a fulfilling life. You can tell I get excited about next steps because I believe it's so vitally important. And here's the great part. So now, if you use the client portal, what happens? This date shows up in their client portal. So when I go over these next steps and I get the client to confirm with me and make a verbal contract, and I say, I'm going to follow up or hold you accountable to do these things, the power of that. That is when we impact lives. That's when we change lives. That's when we change lives for generations. So at this point in time, I'm going to scroll up to here. I'm going to click on that little globe, and I'm going to go and show this client. We're going to manage. We're going to go preview client website. I'm going to come right. We're going to have to go skip because new client. All right. We're going to go right up here, and I'm going to show you, Mr. and Mrs. Client, you're going to get these. And by the way, another mental thing, you can check these off. I know there's certain people get like a joy from checking things off a to-do list, right? That's powerful. This client. Every person gets a sense of accomplishment. It's win stacking. You know, if you give them a bunch of documents they need to get, this is why I don't use this different portal to collect client documents. Our client documents are collected in here. We load these next steps. We actually have all the client documents, our fact finder, in a Word document, and we copy and paste these next step. I would love if eMoney would allow me to load next steps in there and have that to automate. Holy crap, you want to talk about the man hours that would save me and how many people would get rid of these third-party software they're using. There is suggested documents. It's another thing. It just doesn't work the same effectiveness as what Next Step does. This is such a powerful tool that eMoney's giving you. The psychological and the behavior patterns that this encompasses. They're coming to your portal to see this information. By the way, we're going to sign out here. And we're going to come right back down to Next Steps. So go to Facts. Scroll down to Next Steps. We actually copy this and paste it into an email. So our follow-up email will reinforce it. You can go to your client portal. This stuff's loaded at your client portal. Here's the 4 things we talked about today in this email. Boom, here's your client portal. Man, is this powerful. It's all in one place. And it's designed a conversation because look at the end of the meeting. It's just like we're big EOS disciples. I've talked about Gino Wickman's EOS. At the end of our L10 meetings, we review the information, the next steps you're going to have, right? Your to-do list of what you're going to do. At the end of every effective meeting, we want to end with next steps. Here's what I'm going to do, and here's what you're going to do. And we're going to find a way to hold each other accountable. I see so many financial planning websites that say, we offer white glove service. Our 785 years to combined experience, we all sound the same. And clients don't give a crap about that. Clients care what their problem is and how you help them solve it. Businesses exist for one reason only, that's to solve people's problems. And their problems are not finding 785 experience or white glove service or you returning their calls. They don't care if you return your calls. I mean, you gotta return calls, right? But this whole idea that they need a call returned in 30 seconds or 5 minutes or an hour, that's important. This trumps everything here, is if you help me achieve my goals. That's why I hire you as a financial planner. Help me to pursue my goals and live a fulfilling life. And this next steps, is this a powerful tool. The way that eMoney laid this out for you, and if you use this right, I encourage you, if you're an eMoney user, please use Next Steps. Please use Next Step because your clients need it. Your firm needs it. We got to find an effective way to hold everyone accountable. You're probably using another tool to do this. Let's make it all in one area. One app, one area to log in. This is an effective tool. So I want to end with a couple small things here, a couple more ones. That's our base facts, but one of base facts, I'd be remiss if I didn't talk about 2 other things. When I'm done with this and I'm going through a client in that meeting, or clarify meeting as we call it, I'm going to go up here to go to presentation. Yes, you can go to presentations if you're going to reports as presentations, but this go to presentation is a relatively new update, probably the last 2 or 3 years. I love this. It builds this out. You should know what all these are. If you don't, you can click on any one of these, you can build it up. You should get used to these ones. You should have a firm of what we look, go to preview. This is what we do as a firm. Here's how we look at these things, so it shows you what's on here. Also, if we click back up to facts, you can go here and you can view as an online one before you print it. But we click all the boxes on here, and literally what this is this creates a snapshot. When you go to download and distribute, which is a newer update in the past year, you used to just download it, then you had to went to the vault, and then you had to share with the client. It automatically shares with your client. They see their reports. It does come in as base facts as the name. So we go to vault, we go to reports, and we rename it, and we say, clarify meeting overview, and we put the date. We're in Decision Center every single time. We say financial plan draft, and then we're going to finalize the financial plan, update it. What this does is a great CYA, but it's a great value add tool. Most people, when they meet with you, most especially couples, about roughly 2 to 3 hours after they meet with you, they're going to have a conversation, and they're going to try to remember what you talked to them about. And they're both going to hear things differently. This gives them that deliverable. This helps them understand this. This is a great way for them to see this. But talk about the impact over time. This progress report that eMoney's coming out with and working on in the future is going to really help to this. But I think one of the things that we do poorly as financial planners is looking back. In my faith, there's this constant story of people turning away from God. And there's this constant, you stiff-necked people. And what they mean by stiff-necked people is you don't turn around, you don't look at the back. So how many people set goals without reviewing the past 3 years? You can't set goals for the year unless you look at where you've come. And I think that we want to add value. We want clients to never complain about our fee. You have to have all this, like, look where you were at when we first started. Now you can go back, and I do this, by the way. I pull up these reports. Like, look 5 years ago. Look where you're at. And I'm telling you, this progress thing that eMoney is coming out with, when it comes out, it's going to do this work for you. But you still want a CYA. You know, I actually had a client I always call Little Timmy. Little Timmy's our made-up name for another person that comes in and tries to come after us, another financial planner, somebody to do our job. But we had a Little Timmy moment, we call it. And I had a client, it was a great client of mine, passed away. Widow comes in, I have this great meeting, and the son-in-law says, hey, Mom, I need to meet with Greg about my own personal finances. Can I have 5 minutes? And he basically says, hey, I was going through my things. My dad canceled life insurance policy, and that's money out of our pocket, and I want to know why. I was like, sure. I literally went in, pulled up the report from that time, and literally showed him and said, cancel this policy because this costs X amount of dollars, and the death benefit's actually going down every year, blah, blah, blah. And I had detailed report reasons why we canceled that policy, and actually showed him that the reality is at this point in time, it wouldn't even be in existence. It was an index universal life, it was a universal life policy that was decreasing in value and was not a great fit for what the client was doing. But talk about, man, I was able to pull up that report really quickly, be able to do that. So we love this part. Last part before we get out of here is we're going to go back to our base facts, if you don't mind. And I'm just going to talk about what I also love is that the way this is laid out is connections is down here. Man, has this nice connections here. This client doesn't have any connections as a sample client, but this is a quick way to when a client has a question about their connections, things are happening. You can also go into the client's website, and you can see connections that way. But again, I love the way base facts is laid out. This is one of the parts that I do love laid out in base facts. So, summary. Everyone wants to start by building out the plans. Before you get good at building out the plans, you got to understand the why behind eMoney. And I encourage you to get really good at base facts. I encourage you to not use advanced facts. When we go into eMoney 103, I'm going to start out with just a quick overview of advanced facts, and then we're going to get into data input. And that data input is going to lead us to be able to start building out our techniques, start building out our plans. So we're going to get to build out financial plans, but we still got to learn a lot more. Thanks for joining with me on this journey. I hope you take this information and you're able to impact more lives. If you find this valuable as you're going through this class, please let me know. Please share with me the impact it's having. But also, if it's not, please share with me how we can improve upon this. And lastly, if you're watching this video and stuff is dated because eMoney is constantly changing, do me a favor. I've given this to you for free. Just take that few minutes and reach out and let me know. Thank you for educating and empowering your clients. Because when all financial planners get better, the whole world gets better.